Markets witnessed some profit booking in trade today after 7 sessions of gains. The Nifty touching a fresh live high of 18,604 in early trade, but coming off those highs to close at about 18,418, down about 0.3%. Sensex also closing at 61,716. That's down about 50 odd points for the day. Profit booking in metal, FMCG, PSU bank shares dragging the benchmarks lower. Top laggards today, IRTC a 6% knock coming in. Tata Motors, iShares, a couple of those auto majors cooling off. Definitely we saw kind of gains Tata Motors saw last week. HUL continuing to look a little weak in trade, and Titan also seeing some amount of profit booking setting in. Gainers, Tech Mahindra bouncing back. We had L&T, Infi, Kotak Bank and Bajaj Finserv, some of the names on the upside in today's session. Broader markets unperformed and the S&P BSE mid-cap and small-cap index ended the session lower, both close to about 2% respectively. The shares of Tata Power, IRCTC, IDBI and Oberoi Realty all cracking in trade, down between 7 to 11% on profit booking. Remember, shares of IRCTC are up nearly 300% in the last 6 months. Among sectors, realty, FMCG, PSU, metals, all of these worst hit. FMCG giant HUL or Hindustan Unilever reported healthy Q2 earnings. The performance was broad-based with all divisions growing and competitively. Home care up 15%, beauty and personal care up 10% and overall volumes also growing by 4% in the July to September quarter. The company reported an 8.86% year-on-year rise in standalone net profit. This was on the back of sequential improvement in trading conditions, according to Chairman and MD of HUL, Sanjeev Mehta. The earnings are before interest, tax, depreciation and amortization, or EBITDA, for the said quarter came in at 3,132 crores. That's up 9.2% on a year-on-year basis. EBITDA margin, meanwhile, was down 40 basis points year-on-year to 25%. This downfall was also aided by the consistent rise in input costs via increasing raw material prices. IRTC Express, which was running amok, was brought to a halt today. The stock plummeted 15%, that too after crossing 1 lakh crore in market cap earlier in trade. Investors pulled the chain and shares witnessed a slump of 1,400 rupees. The state-owned entity entered the market in 2019 and since then the stock has soared 19.7 times the IPO price. The dominant player in the rail travel market has seen a growth of over 275% in the past 1 year. With COVID cases on the decline and vaccinations nearing the 100 crore mark, IRCTC's rally has only accelerated. Good news for Indian banks, with international rating agency Moodys revising their outlook to stable from negative. This comes just days after Moodys revised India's sovereign outlook and also those of individual banks. Moodys cited a stabilizing asset quality and improved capital drive among other reasons for the change in outlook. The upgrade will make international borrowings cheaper for banks and also displays greater confidence of global financial institutions in the Indian banking system. With the government removing restrictions on domestic flights, allowing airlines to operate at 100% capacity from this week, attention is shifting to another issue: the removal of the existing fare caps, the minimum and maximum fares that airlines can charge for domestic flights. Government sources have told Business Today TV that the fare caps are most likely to be removed with effect from this month end. Karishma Sudani joining us on the story. Karishma, we've heard several times in the recent past airfare caps would be removed as capacity and demand were rising. What's the latest on this front now, and what happens to airfares?
You know, Abha, the Indian aviation sector is on the verge of a turnaround, and sources tell this to Business Today television that while the capacity restrictions have been removed, now government is looking likely and expected to remove the fare cap on prices for domestic aviation, and that's going to happen as soon as before the winter schedule kicks off, which is going to be on October 31st, that is just next week. Let's understand this, that passenger traffic has it's been soaring high and has immensely shot up in last few months, and that's not just because of successful vaccination, but also the fact that consumers are now trusting air travel back. If we talk about the impact on removal of price caps, we do not know how how likely that is going to cause a major big impact, because you also see the festive season is around the corner, and that could be based on the demand as per routes.
Thanks for that, Karishma.